What's going on, traders? I want you to join me on this recording of a live trading session from this Thursday where I took a short on ES and we managed to capture over 3 hour profit in like 10 minutes. Now, I'm going to go over in detail my thought process as I execute this trade in real time, from the analysis to how I managed the risk and also how I sized into the winning position. I'm going to cover it all in this one. Now, if you're new to my channel and you're also learning how to use the volume profile, if that's something you're interested in, we're going to talk about that in depth because it's a major component to my trading system. So just sit back, enjoy, and let's get into it. All right, guys. So before we actually get into the recording of the live trade execution, I want to go over a few things. I want to talk about volume profile and I want to talk about draw on liquidity or directional bias, right? In my opinion, it is important to have that directional bias or draw on liquidity in place before you start looking for your trade entries. All right. I think a lot of people get caught up trying to get the perfect entry system, but they have no narrative for why price is going to go to where it's going to go to. That's where the volume profile is going to come in this recording. So I want to get into the charts real quick and show you guys how I get these levels. So we're going to be using the indicator SVP. It stands for Session Volume Profile. And what this indicator is doing is it is going to plot automatically all of the volume profiles of the previous days. So if we zoom out, these are all profiles of the previous day's action. Now, this is the current day's profile, and this profile is developing as the day goes on. So we're not going to be focusing on the current day's profile, only the previous days, which is right here. Now, what I do every single morning before I get started trading, I mark the value area high, low, and point of control of the previous day. So if we see here, I go in, I put a horizontal line right here. This is our value area high of the previous day. So let's mark that off. We got it right there. I don't like to have hard lines just so that my chart doesn't look too messy, but you see it right there. Now we're going to mark our point of control, which is this red line right here. That is the level we're going to be really focusing on in this video. And our value area low is right here. But if you see, when the levels are so close to each other, I don't really see it relevant to mark the value area low in this case, but it is right here. So right where the highlighting begins at the bottom of the range, that's our previous day's value area low. We'll mark it off just for the sake of it. But these are our profile levels, and they're going to be very relevant coming into the trading day. Now, we have a statistic that roughly 80% of the time, the market is going to engage with its previous day's point of control. So this is going to be the framing of the narrative for my short idea. Now, I got short around 9:30, like right at the open on ES. And the reason being, if you see here at 1800 hours, so that's right here, the market opens up way above value. Right? We open up way above the point of control and the previous day's value area high. So because I know that 80% of the time we're going to engage with the previous day's point of control, I am going to stick to a short biased narrative to trade in the direction of the point of control because I know we have really high likelihood that the market is going to gravitate to this level. Now, why does the market want to gravitate to the point of control? The point of control, and if you don't know anything about volume profile, I'm going to put out some more videos on this, and I already have one on my channel. But the point of control, just to be brief, is the level of that current day that has had the most volume conducted at it. So the most trading activity on ES yesterday happened at 6,133.75. That was the price that had the most volume conducted. So think of this level as a magnet right now because it has not been engaged with. So the market is going to be attracted to coming to where those orders are. So now that we have our narrative in place, I know I want to trade to the previous day's point of control for the 80% setup. That's what I call it, the 80% play. I know I want to look for shorts. Now, that doesn't mean I'm just going to blindly get short when the market opens, right? I trade the New York session. I don't focus on London or Asia. And I just want to get a good entry where I could have a moderate risk to reward with a clear invalidation and take my play. You know I have good stats that this trade is going to play out more times than it's not. So now let's go down to the 5-minute time frame. So I think we had 8:30 news. So right here, we're at 6:50 a.m. So let's just go forward a bit. We're not trading any of this price action, right? We're only trading New York session. Okay, so right here, we're coming in. It's about to be 9:30 open. Now, what I was looking at here was a few things. Number one, I know I want to trade down to the point of control. That's a given. On top of that, we had swept some internal highs right here. So we had taken liquidity. That's something I want to see when looking for a reversal trade. On top of that, we had these relative equal lows right here. So that's another thing that kind of helps aid in the directional bias. You know, we want to look for relative equal lows to get taken, or they're right here. Actually, these ones are like perfect equal lows almost. So these were the equal lows. So we have some internal liquidity we want to target. We've swept an internal high. And on top of that, if we go to the NASDAQ at this time, so what day was this again? This was on Thursday of this week. Let's go to NASDAQ real quick. I want to show you guys what we had on the NQ. So we had an SMT divergence, I believe here. Let me just go back to ES just to see that. So this is 5:05 a.m. 5:05 a.m. Yeah, right here. Really strong SMT. So if you see here, NASDAQ put in a higher high, right? A brief higher high. While ES puts in a lower high. That's our SMT divergence. So if we just start stacking these confluences, right? We have the 80% set up in play. We want to trade down to the previous day's point of control. We put in a high right here. We started getting some displacement lower, taking out all of these lows right here, but then we left relative equal lows right here, right? So we have relative equal lows. We put in a short-term high, had some displacement lower, left relative equal lows. Then we swept an internal high here, but displaced lower again, still leaving these lows intact. So now there's liquidity resting here. Even more is being built up. On top of that, we have the SMT divergence. ES puts in a lower high here, while NQ puts in a higher high. This is what I call an A++ setup. I will take this setup any day of the week if you give it to me. This is my favorite kind of trading setup. So at 9:30, I decided to just get right into this trade and get involved. Now, this is where, when we go into the recording, we're going to talk about how I size into my winning positions, because one thing I don't like to do is to be in full volume trades before the open, because we all know the volume at the open is very high, and there could be a bit of whipsaw action. You can kind of get stopped out really easily if you're in at not the best spot. So I didn't want to miss the move, so I put in half of what I usually trade. So I had 2 contracts on. I decided to start with 2, and then as the trade went in my favor, if it went in my favor, I would size into my position with another 2 contracts. That's how I size into winning trades, and then trail my stop down so that I still keep the same dollar amount of risk. And I'll go over that in the trade recording a little bit more in depth. But if we just start playing out this price action, so right here I set a limit order, and I got filled, and it started going immediately in my favor. Now, I mean, I should have been on the 1 minute right here. I mean, the move was just so quick. I didn't even really have time to go over it here, but we'll do that in the recording. But as we had this strong drop down, I sized into my position. So I added another 2 contracts. And then what I did was I had an 18-tick stop loss, right? My average entry moved down to around 146 when I sized into that position. And then what I do is I trail my stop with it. So if my average entry moves down to here, I keep an 18-tick stop loss, but it's lower now. So what I have done is kept a similar dollar amount of risk by trailing the stop down as I sized in, but my R multiple is now going to be doubled because I doubled into the position. And then as soon as it started displacing lower, stops go to break even real quick. And we just rode this down to the point of control. 80% setup just played out beautifully. And I mean, we didn't even get a reaction here. It was a really bearish day. We just continued to slam lower. But that's all good with me. I was able to capture 3R, and then it was really a 6R trade, right? Because I doubled my position and then trailed my stop down. So really it was 6R with the price movement of 3R. So it was a really great trade. that's kind of the explanation of how I got into the setup. And now let's just get into the trade recording and I'll just walk you through it so you can actually see it in real time. All right, so we are in the recording now. And as you can see, the video starts with me short on the ES. And just like I said, I'm only short 2 contracts right now. I want to have only half of my usual position size in because I was getting involved right at the open. So just to be safe, I could always add into the winning position as long as I can trail my stop safely, which is exactly what we're going to do. Now, one other thing I do want to add that was a major confluence to this setup was that we were trading above midnight. So that being said, we were in a premium of the daily range as long as we were trading above midnight. Now, right there, I add into my position. So I have just doubled my position size, but as you see, I trailed my stop with price. What that did for me was allow me to have the same dollar amount of risk, but have double the R multiple because I'm now in for another 2 contracts. Now, at this point, the trade could still lose, and I'm willing to accept that because I'm seeing what I want to see for the time being. Now, we're going to get some really quick expansion pretty shortly, and the trade is just going to go right to the take profit level. But right here, we just got to be patient. It's hovering around our entry, right? But as long as my stop is in place, this trade is valid. Now, we're about to get ready for the expansion, and it's going to be really quick. So did you see right there, I trailed my stop even more. As whenever I can reduce risk, I want to reduce risk. And I just did it one more time. The trade is basically at break even now. And we're going to get ready to hit our TP. That's just for me right there. Remember to practice patience, and boom, we are out. Those are the executions, and that's it for this trade. Really quick delivery, perfect analysis, and obviously we continue to move much lower for the rest of the day, but that's enough for me. I don't need to capture the entire meat of every single move. I just need some good risk reward. And that's it for this video. Have a good one, guys.